Hello, Mavericks. How's it going? This is Rob Reinhold, and we are one day away from the US CPI report for August. So let's jump into what the forecasts are, what we're looking for. And the forecast we are looking for is a 0.2% on the CPI and a 0.5% on a core CPI. Now, before you get all excited about that, these are month over month numbers. M divided by M is month over month. If we take a look at what they're looking for year over year, we are still looking at an increase to 6.1% year over year. So what this report is going to be showing, if it comes in at the estimates, is that inflation, yes, has been slowing month over month. The hot number we got last month is going to be less. So the trajectory of gains is going to be less. However, inflation is still growing month over month, which means that it's going to be growing year over year. So while this is a nice number to where, again, the last couple of numbers we've had in CPI have been like close to 1% month over month, which is a really hot number, things have calmed down, but it definitely isn't going to give the green signal to the Fed that they can do anything other than raise more rates. Now let's talk about what is likely to happen. 2 weeks ago, I said before the payrolls report that we got last Friday that if the number was too hot, it actually was bad news for equities. And the reason I said that was because the market was starting to think that, okay, maybe the Fed's going to back off a little bit because inflation's coming down. They take a look at oil and gas, and a lot of the other commodities were coming down. They thought, oh, maybe the Fed isn't going to be as aggressive. And then that jobs number came out, 528,000 jobs, and the market didn't like that. They said, oh, we can no longer think that the Fed is going to be patient, and we think they're going to be aggressive. And so we've seen a sell-off since that job report on Friday. So we've had a couple days sell-off. We'll take a look at the charts here in a second. But this is going to be the number that really cements what is likely to happen in the next jobs report. If this number is as forecast or higher, I think the equity markets don't like that, because it's going to mean that the Fed is going to be a lot more hawkish than they priced in. They thought the Fed was going to back off with this pull down in the market and in commodities. If they have to go back to forecasting 3.5%, 4% on a 10-year bond, this equity market is too high. And so this report is definitely going to be the one. If it comes out hotter than expected, you should definitely expect to see dollar strength off that number. If it comes out as expected, probably fairly neutral, and let's say somehow inflation comes out below expectations, we're likely to see a dollar that weakens a little bit. But I really think the risk here on this trade, I think there's more upside to dollar than downside. So let's talk about trading it before we look at the charts. Anytime we trade news at Maverick, we always have to pick a method. Are you going to enter before? Are you going to enter on the news, or are you going to wait for the move to happen and then enter off of an entry off of that? The big thing to worry about is slippage. So the first one, getting in before the news announcement comes out, this one has the most amount of risk. It also has the most amount of reward. Slippage is when you put your stop order in, says, okay, if I go short here, I want to have a stop at 183.10. Well, guess what? It could blow right through that number, and you may not get filled till 183.50. That's how fast these things can move. So you have slippage to worry about. Another thing you have to worry about is the whipsaw, where you get long and you get stopped out. You can even get short and get stopped out. On this kind of price action, everyone loses. Longs and shorts lose. So going into the report, we have to be very conscious about, okay, how are we going to enter? How are we going to handle slippage? How are we going to handle a whipsaw? So one of the things we really like going into a news report is like a half position. So let's say you were going to take a one lot position, 100,000, and have a 50 pip stop. Well, go ahead and take a 50,000 position with a 100 pip stop. This is going to allow you to sit through a lot of this volatility, and then you can actually always add on that other 50,000 when the trade develops your way. So again, you've got to make a decision. Are you going to enter before? If you enter before the news, you better have a good game plan, because when things go against you, you need to have that game plan. Again, half positions, quarter positions, something to where you can sit through that volatility. And if slippage hits, it doesn't kill you. Get ready for that whipsaw. I think there is going to be a whipsaw. I would not be surprised at all to see this whipsaw. So I'm looking at a second stage entry tomorrow. I'm going to let that whipsaw happen, and I'll look to take a trade after that on the report. Here is the chart on our US basket. So again, this is the US dollar basket, evenly weighted against 7 other currencies. And I want to really take a look at what's happening. This is a 4-hour chart. And you can see over the past couple of days, this EMA has been very flat. We've had one little run and that came up on this whole candle. But if you take this candle out of there, you can see the dollar's really been going sideways. Now look, a currency going sideways is not a great trade, period. However, a currency going sideways into a major news announcement, that is actually consolidation. That's just not sideways. This is consolidation. So we do think that this dollar is getting ready to move, but you can see the move we've had has been to the downside. So dollar topped out here. We came down, we had a run, and then this was the jobs report. We're right back to where we were before the jobs report. To me, I think this is a good setup on dollar, and it's just a matter of picking points. Again, this is a dollar basket, so you can't just take a look at this and trade it. This is not a tradable symbol. But what we can do is we can take a look at certain points. So a breakout of Friday's high would definitely be a buy signal on dollar. To go short, again, I don't like dollar short, so I'm not even going to talk about that. So I'm only looking at long dollar going into this report. Currency pair I like the most is dollar yen. Dollar yen, we've been seeing the most amount of negative correlation between the dollar and yen. We had a huge move down in dollar yen and a huge move up. This is a 500 pip range that we're dealing with here. So I really like dollar yen as a trade. The question is entry points. So let's take a look at this entry point here, 135.55, 135.60, somewhere in this area. To me, that is a clear buy on a breakout. The problem is we do have a little bit of overhead resistance there that we need to get through. So we may have a little bit of time to where, it pops and then it hits that level. But after that, we have smooth sailing up to about 137.50 on dollar yen. This is my number one pair, and the only reason I'm playing dollar yen is not from relative strength. It's from these are the two that have been the most negatively correlated. It seems like when one goes up, the other goes down. There's a lot of money moving through the two of them. Another possible pair is euro dollar. Now, euro has been more strong than weak over the last couple of days, but you can see against the dollar here, it's been about flat. So same thing, you're going to pick some points here, 102.55 for a potential buy point. A sell point down here at 101.40 would be a point that you could absolutely take a look at. So I'm looking, again, you can look to trade both sides. Look to, if it goes up, great, grab it. If it goes down, great. But I would wait for these points to break. And as I said, I'm doing a second stage entry. So I want those points to break, hold those levels, and then extend either the gain or the fall before I get into it. Since I'm looking at long dollar trades, we could take a look at it against something like the Aussie. That's been a little bit weak. You can see over the past, 7-8 days, it's been fairly flat. But Aussie dollar, I think I would want to take a look at an entry, somewhere here in the 69.40 area would be my entry here on Aussie dollar. So to wrap this up here, always use stop limit orders. We didn't cover that in here, but please go watch our video on stop limit orders. These are the orders you want to use around earnings reports for stocks, around news reports for currencies, because you need to control your entries. The stop says get in here, but the limit says don't pay more than this. You're making a little window that only inside that window can your order get filled at all. If it runs through that window, you may not get it, but you have to control your orders as much as possible. Dollar is consolidating going into this. I like the setup on dollar. I think you can go long or short. I think the long side is going to be better. Because look, let's say inflation comes down a little bit. It's not really going to take the pressure off the Fed. And we're still going to have, again, a stronger dollar because we do have a Fed that is still looking to aggressively raise. Yes, the dollar might come off a little bit, but I think the big risk is if this number comes out hot, I think the market is ready to bring that dollar at least back up to Friday's highs, if not higher. So I'm watching dollar yen. I like that for a breakout to the upside, but you do have to look at euro, Swiss franc, and yen are looking the strongest at the moment on this Tuesday before the report. So if you wanted to be short dollar, I would take a look at euro dollar or dollar Swiss franc for the right place to be. Thanks for joining me. Everyone take care. Goodbye.